Back to Bazaar morning call. The SGX Nifty, as we told you earlier, is indicating a 100-point higher start if you compare it to the Friday's close. Our entire research team is here to tell you about all the stocks that you need to watch out for as we kickstart a brand new truncated week. Anuj, let me start with you. What are the stocks on your radar today?
Yes, Sonia. So, if we start at 91.40, then I would want to see where the, if the market is building on or not, because that of course changes things. But, in general, focus on relative strength. I think Asian Paints is a stock which showed signs of some kind of double bottom on Friday at 1500 thereabout. Very strong delivery buying in a weak market. So that's something that I'll keep on my radar. And very quietly, cement stocks are moving up. I don't know the reason, but perhaps value play or whatever. But ahead of monsoon season, it's very strange to see. But you've seen a big move in a lot of cement stocks. Ambuja is a stock which has now crossed 20, 50, and 100-day moving average. So quietly, these stocks are moving up. So just keep an eye on some of these stocks.
That, of course, we will be listening to other cement numbers that came in as well. But Mangalam, ITCs, before I get to all the big results, sprung a surprise with that acquisition.
It sprung a spice, if you must, Radha. It's acquired Sunrise Foods and entered the spice space. And if you were in the eastern part of the country, you would know it as a leader of spices in East India. If you, look at it from ITC's business perspective, it is a good acquisition. Why is that? Because despite the consideration being undisclosed, it is a high growth market, high gross margins, and ITC has a lot of synergies with it. Over and above all of that, post-COVID, the shift from unbranded to branded will further aid their growth. It will aid their FMCG revenue by around 5 to 7%. So not like, what GSK Consumer was to HUL, but definitely a big positive. Where do the synergies come in? One, ITC's agri-sourcing capabilities. Secondly, ITC has in-house chefs. They have hotels. So there would be a lot of, mix and match out there. Over and above all of that, they are already into packaged foods. And while this business is strong in the eastern part, they have a strong distribution across the country, so this could do fairly well for them. Reports indicate that they paid anywhere between 2,000 to 2,500 crore for this business, which is not too much given ITC's strong cash pile.
Okay, thanks a lot for that. Let's move on to the big numbers now. HDFC Limited will dominate Mindspace this morning on the back of the asset quality pressure. Abhishek is here to give us the fine print. Abhishek.
Well, Sonia, deterioration in asset quality is one part, and even the moratorium looks to be on the higher side. So 26% of the corporate portfolio is under moratorium and 21% of individual portfolio is under moratorium. The asset quality deteriorated sharply in absolute value. It increased by 47% quarter on quarter. This was primarily led by the non-individual portfolio, wherein the gross NPA increased to 4.7 when compared to 2.9 in the previous quarter. So the overall gross NPA increased to 1.99% when compared to 1.36% in the previous quarter. Back to you.
Okay, Abhishek, thanks a lot for that. Well, when a trade becomes consensus, there is some kind of mean reversion, and that's what's going to happen with Bharti Airtel today with that large block deal. Nimesh has more details on that. Nimesh?
Hi, so in Bharti Airtel, the promoters are looking to sell close to $1 billion of stake via block deal today. The floor price is set at 558, which is a 6% discount to the Friday's closing price. The total stake sale would be close to 2.75%. With this stake sale, the promoter holding will fall to 56.3%. So they're selling close to 2.7% stake. Now, what I understand from analysts and the reports that I've read, proceeds of the stake sale will be primarily used to pay the debt in Bharti Telecom. Remember, Bharti Telecom had raised money to subscribe to the rights issue last year at 220 rupees per share. So large part of this money will be used to pay the debt.
Oh, right. That's important. But as Anuj said, for the moment, it will be red on the screen. Let's get back to results. Nigel, how were the steel numbers? Jsw Steel, JSPL?
Well, let's start off with Jsw Steel first, Lata. The problem for them is really the debt in their books, as well as, the pending acquisition of Bhushan Power. Now, in terms of their numbers, the standalone EBITDA per ton, that came in much better, came in at around 8,700 rupees on a per ton basis. We were working with a number of around 8,100 rupees. So that was good, but that's where the good news ends, because the foreign subsidiaries continue to struggle. For the past quarter, they gave a EBITDA loss of close to around 300 crores odd. So there's no improvement and no signs of an improvement out there. So that's not good news. The net debt in the books has spiked up to around 53,500 crores. That takes the net debt to EBITDA to around 4.5 times, which isn't very, very good news. And they have a pending acquisition as well, so it'll go even higher from here. So Jsw Steel starts off in the red. JSPL, though the numbers look good on a consolidated basis, the margin saw a big expansion. The domestic numbers look quite good. That's the steel business. A calculated EBITDA per ton came at around 10,500 or 11,000 rupees per ton, which is positive. And you got a pleasant surprise coming in from JPL. That's the power division. The EBITDA number came in at around 330 crores, or the street was working with a number of around 250 crores. Even their Oman business did very, very well, because out there you had the highest EBITDA number that has been reported all the way since the first quarter of FY19. So JSPL opens up in the green. Back to you all.
Okay, thanks a lot for putting it into perspective, those metal numbers. But UPL was a good showing this time. Sonal, my colleague, is here to give us the details. Sonal, over to you.
Good morning, Sonia. Absolutely, the numbers look good on an adjusted basis. If we adjusted for Arista acquisition, revenues were up 26%, EBITDA was up 25%, and profitability, that decline, that is just because of an adjustment. For FY20, the company has achieved its guidance on all parameters. Debt has reduced by 4,400 crores, and volume growth, that was at whopping 29%. For FY21 as well, the company says that they will reduce the net debt to EBITDA to 2 times versus 2.9 times that they saw in FY20. So all is good, but Motilal raises one concern is that debt has been reducing only because the company has issued perpetual bonds of around 3,000 crores, which is considered as an equity investment as far as IFRS accounting standards are concerned. If we strip that off, debt should have been reduced only by 1,200 crores. So according to them, debt still remains an overhang. But apart from that, numbers were really good.
Okay, numbers were really good for UPL. Now, keep in mind, for 2 days, it's seen some short covering after that one-day big decline, which a lot of people thought was unfair. But Nimesh, Kotak Mahindra Bank will be raising some funds.
Oh, yes, sir. So finally, the QIP is likely to get launched this week, most likely by end of today's session. So watch out for the Kotak QIP book today evening. Only yesterday they got the final shareholder nod to sell up to 6.5 crore shares via QIP. So the QIP will be lined up first, then probably there will be a SPO as well, the follow-on offer for bringing down the Uday Kotak stake to 26%. With the QIP issue of 6.5 crore shares, the Uday Kotak stake will come down by just 1%. So another 3% stake sale will be done via SPO post the QIP issue. So QIP should likely open today evening post-market.
Okay, got that. We are back to numbers. I thought the Dmacc numbers were very good, Mangalam.
Well, Lata, reported numbers were much better than what the street was expecting, but the beat came in January and February. March saw a bit of a decline, and the street will look at the first quarter because the company has painted a rather grim picture for the first quarter. So if you take a look at it, revenue growth of 23%, EBITDA growth of 11%, net profit growth of 41%, no complaints about the reported numbers. But March, we saw a revenue growth of just around 11%. And if you thought that was low, April saw a revenue decline of 45%. We did see a bit of a recovery in May, but the street will definitely keep an eye out on that. And when you're trading at 67 times, there is really no room for error. A couple of things that may keep a lid on the stock price. Remember, it's not prone to see big declines. The one part would be valuation. Secondly, it comes out of T2T from tomorrow. And thirdly, there has been a big launch of a competitor over the weekend.
Okay, absolutely. Let's get back to the financials because many numbers to analyze there. Abhishek is back with us to talk about IDFC First Bank and DCB's numbers as well. How do they look, Abhishek?
Well, Sonia, you know, DCB Bank has reported the worst numbers in last 4 to 5 years to say. So, you know, under moratorium, 60% of the book is there. Their asset quality also deteriorated. Gross NPA increased by 31 basis point to about 2.46%. The CASA ratio, or the low-cost deposit share, as well as the net interest margin are perhaps the lowest in last 20 quarters. Coming on to IDFC First Bank, the bank has reported profit for the first time in last 7 quarters, and this was due to jump in the other income and cut in their operating expenses. The net interest margin jumped sharply to 4.24%, that compared to about 3.86% due to the denominator effect. Both the deposits and advances have shrunk by 7.5% to 8% on a YOY basis. Back to you.
Okay, Abhishek, thanks a lot for that. Mangalam, how did Bata numbers look?
Bata numbers did not look too good because of March. So if you take a look at it, overall revenues declined by about 9%. In Jan and Feb again, the company posted a revenue growth of around 8%. But one fortnight of a lockdown in March meant the entire quarter's revenue declined by 9%. So we'll keep an eye out on how the first quarter pans out. And that's the case for all the consumer companies. They had a growth of 8% in January and February. EBITDA saw a big jump, but that's irrelevant because it was on account of accounting changes. The net profit saw a sharp decline, a 56% decline. So let's see how the stock pans out today.
You know, every June in school, I used to buy Bata rubber shoes for rainwear and even canvas shoes in June because, you know, you need for the next year for PT classes. So I guess that loss will be there, but let's wait and hear from what the company has to say. Okay, Anisha, quickly, there are some more results on your radar.
Oh, well, yes, let me circle back to the cement stocks that Anuj was talking about. Perhaps the reason is that the initial results from the sector have been positive. So, for example, for Orient Cement, the company has maintained steady margins. In fact, sequentially, there has been big improvement. And what's also positive is the fact that valuations are supportive. For Birla Corporation as well, yes, the volumes have declined by 13%, but they have not come in at weak margins. In fact, if you look at the EBITDA per ton, that has grown by 31%, and that's a positive. Separately, what will support prices is that all plants of the company, except a couple, have started with a utilization of 80 to 100%. So that's a positive. For Newland and Just Dial, the numbers were mixed, but I'm going with green given the market conditions. For Newland, it was a strong operational performance with margin improvement, though the company reported a loss on the bottom line. For Just Dial, the profits are up 23%, revenue is flat, but the margins have improved, so probably a green tick there. Back to you.
All right, Anisha, thanks a lot for that. So that summarizes all the stocks that you need to watch out for. We'll take a quick commercial break. On the other side of the break, Dipan Mehta of Elixir Equities will be with us to discuss all the stocks that are in the news.